Hi all, this is Steve Miley, the market chartist on behalf of forextraders.com, and we're now going to take a look at both the pound versus the US dollar, the British pound, and also the Canadian dollar, US dollar, Canadian dollar, and looking at continued weakness for both the British pound and also the Canadian dollar into early 2016, the first week of the month and the year. Last week certainly showing significant weakness for both these currencies versus the US currency, and we're expecting more of that to come now going into the middle of the month and potentially for the balance of January. So we're going to start off here with the cable, sterling versus the US dollar, and this significant sell-off coming from the end of last year, actually right around the holiday season, just post the Christmas period, selling off from 149.45, breaking down through last year's low from April last year at 145.66 to reinforce this whole bear trend that we've had from June of last year. And this all points to market low. If we zoom out now onto a weekly chart, what we see is here taking out that low from last year, that leaves the market now its lowest level from back here from 2010, where we got down to 142.29, and certainly risk now going through mid-January down to that lower point. In fact, if we go into the bigger picture, much bigger picture chart, look at this monthly chart in here. This trend line comes all the way from 1985, and the market's sitting just above there. It's kind of coming around the 143.50 kind of area, that trend line. And should we break it back down through there, it certainly sets a far more bearish outlook going into January and Q1. We're going to take a look now at the Canadian dollar, and also very bullish in here. US dollar, Canadian dollar kind of just nudging up at the end of last year and middle of December up to 140.02, but a stronger push through that 140 level in here to start off 2016. More importantly, if we go all the way out to the monthly chart, the market having previously surged through this important resistance at 134.57 and 134.62, now also through 140.30, targeting 141.90 level now. That's the highest level the market was at since July of 2003, and a break above there then open up significant upside risk towards this target up here, long-term retracement target all the way up at 146.60. This has been Steve Miley, the market chartist on behalf of forextraders.com, and I wish you a great trading week.